Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here with our SPY and ES systems, which, by the way, have absolutely knocked it out of the park this year, 2022, because of the market volatility. There's been over 106 trades that we've sent to our subscribers. Anyway, let's go and get started here. This is a comprehensive weekend newsletter for December 18th, 2022. This is our back end, by the way, and I'm going to drag this up out of the way. I'm recording this as a YouTube video for our subscribers as well this weekend. Anyway, guys, first off, I hope everyone has had a nice holiday weekend. I feel since a lot of you have already checked out, and that's the time of year to do it. Steve Nelson, for example, he's out of town. He's in Cabo, I think. Cabo or Cancun, but he's out of town. A lot of pro traders are out of town, and this is the time of year to take it a little easy. But this is our comprehensive weekend newsletter, so I may not have as large an audience as I normally do. You can see it's divided into 9 major sections. If you're new to Breakpoint Trades or you're seeing this on YouTube for the first time, these newsletters aren't a 10 or 20 minute video. They're usually about 50 minutes or more. They're very comprehensive. We cover all aspects of the market, our systems and commodities and trade ideas, etc. All right. Also, some of you guys, you follow our ES levels. These are significant levels. We put them on a trading view chart. This is in our newsletter link. I'll also put it in a YouTube video. Kind of like I say here, I'm not going to put I didn't put a bunch of text here in the opening comments. Just please listen and watch the newsletter audio or YouTube video for my thoughts. Okay. All right, let's go ahead and get started. So the first thing we're going to look over, guys, is the mechanical systems, the reversion to mean systems. Okay. We have 2 forms of systems. We have these reversion to mean systems, which we have 22 systems that we run across both the SPY and ES futures instruments. Okay, you might say to yourself, well, why do we run them on both SPY and ES? I mean, they're 99% correlated because you get different trade opportunities because the prices are different. Okay, it also gives a nice averaging effect. They'll do a lot of the same trades, but then they do different trades. There's 22 systems that we run across both instruments. Anyway, so here's what's been going on lately. So the SPY, the bear long. So what that is, I always get that question from new guys. It's a system that looks for long opportunities, and it looks for long opportunities primarily. They occur in a bear market. Okay, it doesn't really occur in the bull market when you're above the 200-day moving average, stuff like that. Anyway, the system's been long here. It took a long back in early December. We had a nice pop. It didn't get an opportunity to exit on that CPI data. I should have probably on the website. Wish I would have exited half of the position there manually, but we did not. The system took a second entry on Friday. These systems are reversion to mean. They scale in. They're buying pullbacks, for longs, and then they exit on a rally. Okay. For the S trap, which you see here at the bottom left, this also took an entry on Friday. You can see the last entry. This tends to be a very short-term trade. And took an entry there on Friday. This system up here on the upper right, the stochastic 60 short, this took a hell of a short there in late November. We took the second entry, and you can see would have been a heck of a trade there. Now, unfortunately, we fumbled it a bit. Not exactly. We took the short here. I covered half of it right here for the website, so we locked in nice gains. I then took it off here, and we should have just left the other half on as the system, closed out. Got to trust the systems, right? Again, we're all human, even myself. So that's just life. We haven't converted to or evolved into Spock from Star Trek yet, So otherwise, as far as, like I said, the bear long triggered on SPY, the second entry, and on Friday, the bear long triggered a first entry on ES futures. We usually trade this MES futures. That's the micro contract. And that's a great point, guys. Look, it's the bear long. It's the same system, but you can see how different it is. On ES instrument, it took a first entry on Friday, whereas on SPY, it's in a second entry. And you can see back here, it caught a nice winning trade, about a 5 week winning trade from July to August. SPY, it didn't catch it. So that's why we run these systems on both instruments. So again, if you're following the systems, you should have a couple longs here from the bear long and maybe the S-trap. We'll see what the systems do this week. Next. Looking at the other systems, remember, we also have these KISS trend systems. So a lot of these for the indexes hit their trailing stops on Friday. This is the S&P 500. Again, we're in a bear market, guys, right? So the in a bear market, these KISS trend systems will be in cash most of the time, and they may take a long for, a month or two and then get out, like it did here in July into August, made a little bit, and it went long there in late October, and then it raised its stop 4 times. So STS, that's smart trailing stop. So again, it's a trend following system. It progressively raises its stop over time, tries to keep it wide enough to avoid various noise, and that would have been hit on Thursday or Friday in the morning. So however you follow it. By the way, these A's, just an awesome indicator. We call that amateur buying. Notice how they occur right near tops. What that is it's, retail investors buying small volume shares, 200-300 shares, and they typically buy at the wrong time. Okay, so pretty useful indicator. Next, chart number 4, here's TLT, that's 20-year bonds. Again, that has been uptrending lately, and you can see this KISS trend system is still long. It went long here in November, mid-November. It's now raised its stop 4 times. So went long here. It set an initial stop, a wide stop at 93.20, raised it each time, and so its current stop is now 104.20. Okay, you can see it went long back here in July, and then really was a flat trade mostly, and got out in August. Next, image number 5. All right, guys, I'm trying to. Anyway, image number 5 here is VYM. That's the Vanguard Value Dividend High Growth ETF. And the system, KISS Trend System, has done a great job for that this year, as you can see. Went long here in late October. It raised its stop 3, 4, 5, 6, 7 times. Finally stopped out on Thursday right there. By the way, look at those A's that showed up near the recent high and some of these other recent highs. By the way, this is my favorite ETF in this bear market. It focuses on stocks with low PEs that pay dividends. The exact opposite of growth, Nasdaq, which has been underperforming this year. Next. Chart number 6, here's the daily GDX chart. That's gold miners. And you can see how the system has done this year. Took a long here in February. Got out here in April. Raised its stop 1, 2, 3, 4, 5, 6, 7. It raised its stop, trailing stop 7 times before getting out. And then it went back long here in October. And it's got quite a few trailing stops here. 4, 5, 6, 7, 8, 9. So it's still holding that. So it's either going to hold this and then go up again. If it does that, we'll see more trailing stops. Or if it sells off, it'll hit that trailing stop and be back into cash. But that gives you an example of some of these KISS trend systems. And by the way, these are going to be a staple of the website. We've added this systems to all the S&P 500 stocks, all the stocks in the Nasdaq 100, over 120 ETFs. They're going to be located in convenient tables. No one has anything like that. So I think that makes you Breakpoint trades unique. That's a product we plan to launch later this month. Next, let's go back to the general market newsletter. So that does it for the systems, guys. I gave you a brief overview of the reversion to mean systems and the KISS trend systems. So item number 7 here shows the index sector table. what transpired for the whole general market last week. So you can see big sell-off on Friday with the indexes down about 1%. For the week, the index has lost anywhere from 2% to 2.7% in the Nasdaq tech area, clearly leading to the downside as it's been doing this year. As far as the major market sectors, mostly a broad-based sell-off on Friday. And for the week, a lot of downage here. Biotech was an exception, home builders, and energy. Currencies, US dollar, actually ended up only slightly down for the week. As you know, the dollar's been selling off strongly for the last couple months. Cryptocurrencies were all down for the week. It's not surprising. Commodities for the week, mostly to the upside here, except for copper, which lost 3%, but nice gains in all the other commodities here from crude oil, natural gas, all the ags were up. By the way, sugar has a bullish chart, which I'll show you way below. Precious metals were down. Unfortunately, they were down pretty good for the week. The stock's leading here. I'll be discussing that in a minute. Remember, GDX KISS trend still has a stop in place. As far as bonds, for the week, TLT was up 1%, 10-year Treasury yield down 2.4%. Next, item number 8. So image number 8 below, this is our economic news calendar. This is a little different format. The format we looked at is not working, so I took this image. But here's the news for the docket this week. We have, ISH PMI on. That's from last week. I'm sorry about that. So today is the 18th. We have the housing starts on Monday, and GDP on December 22nd. That's a big one. And then, of course, Friday, tons of different things here from durable goods, PCE prices, home sales, university consumer sentiment. All right, guys, let's go and jump to the index charts. So the first chart here, item number 9, is a yearly chart of the 5 key major indexes. So each candlestick represents 1 year. So again, as of December 18, 2022, just giving you a snapshot this year, the Dow down 9.4%. Again, it's down the least of the major indexes because, again, doesn't contain all those growth stocks. So they've held up the best. The S&P 500, our main proxy, down about 19% for the year. Again, off the lows. The triple Qs, Nasdaq, down almost 31%. Remember, that's doing the worst. That's those growth stocks. Small caps down 20.5%. Commodities, well off the highs. They were up over 30% at one point. They're still up 16.3%, so they're up this year. And TLT 20-year bonds still down 26%. They were down 37% down here. They were a really good buy about 5 weeks ago, but they're still down 26% for the year. Again, guys, back in December of last year, 2021, we warned about a bear market, and we were obviously correct. Okay, been a tough year for most investors and traders, but we've done a great job here, and our systems have knocked it out of the park. Next. Chart number 10, here's another chart of the here's a chart of the S&P 500. Again, each candlestick represents 1 year, but I like to think of this as my long-term reversion to mean chart. Remember, things revert back to the mean, and what I'm counting as the mean here is the 9-year EMA, exponential moving average, shown in magenta. During bear markets, price comes back and tests that 9-year EMA, usually undercuts it a little bit too, just like you see here in 2002, 2008. It did undercut it slightly here in that 2020 February-March crash. Went below it, then it quickly came back. As you know, we had a blow-off end of bull market, the last couple of years there. And so far, you can see what's happened this year. But look how far we are still away from the 9-year EMA. Again, under a true bear market, we should at least come down to that 9-year EMA. You can see right now it's just below 3,200. And probably undercut it a little bit, at the very least. Now, if this ends up being a real bugaboo of a bear market, honestly, wouldn't surprise me if we went down in the low 2000s, quite honestly, guys. Oh, we'll see. It's going to depend on what the Fed does. It's going to depend on earnings, etc. Next, chart 11. Here's a monthly view of the S&P. Again, this is the chart we were using last year. We marked an end of that bull market in as wave 5 there, and that's why we called for a bear market in late December of last year, early January of this year. So far, that's played out nicely. Okay, you can see a series of lower lows, lower highs. You can see this channel, and one of our targets is the lower portion of this channel. I think sometime next year we'll get down to that point. Okay. Next, chart 12. Here's another monthly view of the S&P, zoomed out a little bit. So first off, you can see that uptrend channel, again, which began in 2009. That was where that secular bull market began. And by the way, guys, that last rally from early 2020 after that COVID crash, that was a classic blow off top of a bull market. You know, I don't show it here, but essentially the slope change doubled from this March 2020 low to the end of 2021. Again, many of you know there's a lot of stocks that went up 400 or 500%. Just crazy stuff, crazy asset bubble, everything, and all that stuff's been unwinding. But you can see, you know, we're still in the channel. I do think we can go down to the here over time and even below that, perhaps. Okay, another thing that's useful, guys, on a monthly chart is a simple 14 link stochastic. In bull markets, the 14 stochastic tends to bounce off the 50% area or above it. And in bear markets, it goes below 50%, as you can see, did much earlier this year. Next, chart 13. Here's another chart of the S&P. This is a quarterly view, goes back to 1973. So, you know, you could draw an uptrend line from the 1974 low there and connect in 2008 lows. That uptrend line comes in right around 2100, way down here. Again, is that possible? We could go down there over time. It's possible. But again, you know, we're not anywhere close to there. That would be sometime in a later stages of the bear market if this bear market ends up lasting, you know, 2 or 3 years. All right. But you can see the channel here from the 2008 lows, which I just showed you above. And again, guys, just very simple things, common sense stuff. Moving average ribbons. When the moving average ribbons, see how wide it got here? They get too wide. That has to come back to the mean and pinch, and that's what it's been doing this year. Next, chart 14. Here's a weekly view of the S&P. So, again, into the bull market in December of 2021. You can see the moving average ribbon here went bearishly stacked. We have a series of lower highs, lower lows. The 200-week moving average is a very widely followed long-term moving average. Price undercut that a little bit in October, regained it, as you know. And that was an area you could have went long when it regained. But you can see price rallied right to the downtrend line that connects all those lower highs and stalled there. And then last week, tagged that area again and the 50-week moving average where it found resistance. Now the big question is, will this sell off and make a new low here, or can it make a higher low and then some sort of bounce? The onus is on the bulls, obviously. Next. Chart 15, here's the daily KISS or the weekly KISS trend system. So in addition to the daily, we do have weekly versions of those KISS trend systems. Again, you know, they've done outstanding. You can see they got out. You can see all these This is the old style. We used DVT. We changed these to STS, smart trailing stop. DVT meant dynamic variable trigger, you know, whatever. People understand STS better, I think. But you can see how this went long back here in April 2020. Kept you in that whole time, raised its stop. I'm not going to count these, but it looks like 20 or 30 raised stops. Got out in January. Stayed out of this mess. It did go long once in early July. Got out right here. Pretty good exit, and it never went back long. You can see how this ATR, very useful indicator, price stalled right there in July, or in August, I mean, and recently here. Next. Chart number 16, here's a daily view of the S&P. Again, you can see into the last bull market, the series of lower highs, lower lows since that time. In August, price rallied up to that 200-day moving average, was a great area to exit. A lot of people were questioning, is the bear market over? We gave our opinion no, and that was the right choice. Market entered a strong decline into early October, and it had to put a decent low in. Whenever you, by the way, guys, whenever you put in 5 clear waves to the downside, expect a decent counter trend rally, just like my comments state here. And that's what happened. So our guess at the time was we'd have some sort of ABC move up to this area. And that's exactly what happened. You had a perfect ABC symmetry up to this 4100 area, which also matched with this downtrend line here. Just everything lined up. We also had a wedge. Price broke from the wedge, rallied up, back tested it, perfect double top, and then sold off. What I did here is I added fibs. Okay, we're right around the 50-day moving average, just a little bit below it. Again, is it possible we could still form a higher low and then rally again? It is. Okay, but you really want to see prices really not lose the 61.8 fib. Next, chart number 17. Here's another chart of the S&P. This is a half day. Again, shows you the same thing, this expanding triangle where we stalled at recently. Next. Chart number 18, here's another daily chart. Zoomed in view, we had this steep uptrend channel. Again, remember we stalled perfectly at that 4100 area, perfect double top. We lost that uptrend channel last week. We've been moving down here. There's an open gap right here. The cash indexes like to fill these gaps. If we do get some immediate sell-off on early this week, I think filling this gap would be a target. You can see we got the 50% fib here and 61.8% fib here. Now, notice my annotations here. Because we broke symmetry, this is now the largest pullback in the uptrend that began here in mid-October. I'm looking for a lower high. Okay, so when we do get a rally, whether it's right from here or we get a little bit lower or fill this gap, I'm looking for an ABC bounce, lower high, and then sell off again. Next. Chart number 19, here's another daily chart. So again, someone asked me, could this initial, first off, you could see the 5 ways, 1, 2, 3, 4, 5, A, B, C. Someone asked me, could this be an A, B, C, something like that? It could, possibly, but the bulls, I think that would be the alternative count at this point. I'm looking for a rally eventually here that forms a lower high, just like I showed you. Next. Chart number 20, here's a 2-hour chart. Again, this measures symmetry. So that we had that trade low in early to mid-October. The largest pullback was 214 points. You had 180 point here. You didn't break symmetry. You rallied up, perfect double top, 4,200, 4,100, like I said. We then lost this channel last week, broke symmetry. This is the largest pullback in this uptrend. Whenever you break symmetry, that tells you with high odds that you're going to form a lower high. So that's why I show these illustrations here. If we rally right from here, maybe we stall up in this 3,900 area or up here. Or if we sell off, fill the gap, then maybe we rally up, retag the 3,900 area where we find resistance. Notice any of these would give the market time to rally for the Santa Claus rally and then sell off afterwards. Next. Again, image number 21, here's symmetry, guys. So again, this is a very good example of symmetry. You note your respective trend, you're uptrending. Okay, you note your pullbacks. When you have a when you have a pullback larger than the other ones, that's a break in symmetry. It tells you with high odds you're going to form a lower high. So exactly what I just showed you in the previous chart. Next. Chart number 22, another 2-hour chart, just shows you the same channel. Again, we're into this open gap here. The big question is, do we bounce first, stall here, then fill the gap later, or do we sell off, fill the gap, and then bounce up to it? That's what I'm wondering. This line here, that's the 61.8 fib retracement from the October lows to the recent highs at 4,100. Okay. Next, chart number 23. Here's a 60-minute chart. Again, we broke this big shelf support early last week. We had that bear flag into the FOMC, right, where price just dumped from. And this was the CPI. Then we had the FOMC here. Perfect textbook bear flag. We lost the shelf support. We're into this open gap a little bit. We have not filled the gap. So again, do we rally up first, then sell off and fill the gap, or do we go down and fill the gap early this week and then start a Santa Claus rally? Next, chart 24. Here's a 15-minute chart. So one of the wave counts I was showing last week from this 4100 high was a nested 1 2 1 2. So wave 1 2, and then your smaller degree of waves 1 2 3 4 5. So is 5 ended here, and we're now starting a wave 4 bounce, or could we have another sell-off here and end 5 down here and then get our bounce? So either way, but you can see the clear 5-wave progression. Next. Chart 25, here's a 3-minute chart. Just from an education standpoint, this provided a nice day trade on Friday, if you're able to look at that stuff. So here's Friday, we gapped down. The largest bounces here were around 14 to 16, 14 points, 13.7, 14.4. We then had the largest rally here intraday, over 16 points, was larger than these. That told you with high odds to look for a higher low, which we got. So you had a nice long opportunity late in the day here and here on those pullbacks to get a nice day trade. Next, image number 26. So here's the other opposite side of symmetry. Remember I showed you the uptrend break. This is a break of downtrend symmetry. I just showed you on that 3 minutes. So you're downtrending. You have the largest rally here, previous break larger than the previous rallies. That tells you with high odds you're going to form a higher low. That's important, guys. When you break symmetry, you then look to buy. Okay, just like on the opposite, you look to sell. Next, chart 27. These 4 time frames. These are from our KISS charts. We like to look at these. As you know, the daily lost its ATR here. The half day. The cycles have been really on par lately. Price has been responding to the resistance and support cycles. Notice we got a support cycle on the half day and on the 130 minute. So that's potentially one for the bulls. All right. Notice on the 130 minute, price has really responded. Look at this. That's the bottom left. Price bounced off that support cycle, sold off in the resistance cycle, bounced at this support cycle, sold off this resistance cycle, bounced at this support cycle, Demark 9, sold off from here. Now we have a Demark, or we have a support cycle here. So those are a couple positives in the short term, these support cycles. Next, chart 28, here's the Dow. Don't look at this too often. Again, it's been the strongest this year because it's those old economy stocks. Nice sell-off from the recent divergent high here. You have a lot of support potentially here at the 200-day and 50-day moving averages below. Next, chart 29, here's the triple Qs, Nasdaq 100. Again, the weakest sector this year. Notice the Qs stopped perfectly at the confluence of trend lines here. The downtrend line from the January highs and this broken up trend line here. Just perfect. Here I added fibs. Looks like I inverted these. The 61 should be here. The 38 should be up there. Hopefully that's obvious. But so this 61 fib down here, right around this 270-50 area, is an important area to watch, guys. See if we find support there or not. Next. Chart 30, here's another daily view of triple Qs. Again, shows you how price stalled here. And there's an open gap here, by the way, too. That could also be a target. We got into that gap a little bit on Friday. Here, you got an uptrend line connecting the recent lows. That comes in down around this gap, too. So that's an important area, guys, if it's going to form a higher low. Next. Chart 31, here's a 2-hour view. Shows this expanding triangle where we stalled from last week. And here's the open gap illustrated. Next. Chart 32, here's the daily KISS trend system. Again, just like on the S&P, it's been mostly in cash this year. This did technically hit its trailing stop here on Friday. Next. Chart 33, here's the 4 cycle time frames. Again, just like on the S&P on that half day and on the 130 minute, you have these support cycles here. And so there is potential here for some sort of little trade low. As you know, the bear long systems went long, so there is some potential there. We'll see. All right, guys, let's move on and look at a few market sectors. Chart 34, here's transports. Weekly view, again, similar to the S&P and some of these indexes, stalling recently at the downtrend line from the highs late last year. Next, chart 35, transports daily. Been more choppy here. The obvious short-term support is this 50-day moving average if it continues to pull back. Next, chart 36, bank index. It's a weekly view, down 2.8%. Couple big rallies this year, but notice symmetry. Talk about symmetry a lot. That last rally stalled right at symmetry, essentially the same point move as this last one. Still looks pretty damn weak here. Long-term demand support zone is way down here. Notice the moving average ribbon was bearishly pinching about a month ago. Next, chart 37, XLC. That contains a lot of the former FANG stocks, tech stocks. And hell of a downtrend this year. It's been cut in half, as you can see. This ETF, all the rallies, notice how they've been stalling at symmetry. So this first rally, this rally here was essentially the same as that one, same as this one. So again, you can use this as a measurement, guys, because if you eventually get a rally larger than these, you'll have a bullish break in symmetry. But for now, not so. Possible longer term targets down here over time. Next. Chart 38, here's XLK Technology Weekly View. Again, weakest sector this year, the tech area. Perfect stalled right at the downtrend channel. Next, chart 39, XLK Daily. Closing right near the 50-day moving average here. Nice sell-off last week. Next, chart 40, SOXS. That's the inverse ETF for semiconductors. We were showing this last week, and that's had a nice rally out of this divergent low. We'll see if this can go through to the upside. Obviously, the market needs a sell-off for this to play out. Next, chart 41, XLE Energy. This has been, in a bull market this year. Lately, though, we pointed out the little umbrella top here. We said it looked toppy. Broke that shelf support in early December. Rallied, back test that, became resistance. Again, this is in a long-term uptrend. I do believe good pullbacks are long-term buy opportunities, especially if it gets down here to the 200-day moving average zone. Next, chart 42, there's the weekly view of XLE. Again, it's in a long-term uptrend, bull market. These are some of the long-term uptrend lines you could look at as buying opportunity areas. Next, chart 43, XBI Biotech. So this has been a very choppy since early October. It appears to be forming a coil. I'm going to be watching this week, see which way this breaks. Next, chart 44, EEM Emerging Markets. Showing this chart, they've had a pretty good rally over the last few weeks. One of our astute members from AmCamp posted this chart, this trend line connecting all these lows going back to the 2009, 2016, 2020. And he posted it when it was here, testing it. This is a monthly chart, not a weekly. So few months ago, and it tested it perfectly, bounced off that support. A great example of noting a trend line, buying at support. Next, chart 45, here's a daily view. Now, regarding symmetry, guys, EEM started downtrending about 2 years ago, well before the general market. It peaked here in early 2021. These represent your symmetry rallies. This rally off the lows is larger than any of these previous. You have a bullish break in symmetry. So longer term, this has had a bullish break in symmetry. So I do keep an eye on this for a long-term buying opportunity. Now, recently it stalled at the 200-day moving average, but maybe if it were to work down to the 50-day moving average, maybe that'd be a good buy. All right, guys, let's move on to some indicators. Chart 46, here's the VIX. So the VIX rallied right off this support zone, demand zone we talk about. That was a good area. That's where the market topped. And you can see where it is right now. Next, chart 47 is another chart of the VIX. We bounce off this support, and this is another support area here. Next, Chart 48, CPC put call ratio. It's now up to 1.28, so it is getting elevated a bit. Again, it's obviously been higher, but it is getting a bit elevated here in the short term. I do believe, guys, that if the market does have a little weakness early this week, we will bottom for some sort of Santa Claus rally. Next. Chart 49, here's NYAD. So there's a lot of warning signs coming into December. You had a big negative divergence between the NYAD and the S&P. You could see these divergences in the past. That one back there in August marked that high. You had a perfect one here. Next. Chart 50, here's the Nasdaq. 52-week highs minus the 52-week lows, which I showed on here. The difference is above here. And every time this has approached zero has been giving you amazing short opportunities. It's picked all the highs of these bear market rallies. Next. Chart 51, here's the daily version. And a lot more action here. Look at this. There's something like 14 times this is near zero. All these areas would have been great shorting opportunities. Look at this. Every single freaking one of them. Okay. Obviously, it's nowhere near zero now. In fact, it's quite oversold here below the lower Bollinger Bands. Next. Chart 52, here's another one. The NASDAQ 52-week high minus lows, cumulative. And take a look at how great this sell signal was, guys. It fell below these moving average ribbon way back here in December 2021. And look at this. Has not attempted to even bounce. Look at that. These big rallies here in 2022, we had a couple of them. This thing didn't even budge. Next. Chart 53, here's the S&P versus the XLP S&P ratio. And this has been given a warning here recently, too, over the last couple months. That told you not to trust this rally here lately. Next. Chart 54, let's look at a couple positives. Here's the S&P versus the SMH triple Q ratio. So what I'm showing here is that the semiconductor triple Q ratio has been holding up a little better than the general market lately. Next. Chart 55, the last comparison. This is the S&P versus high yield corporate. The two tend to move together. And high yield corporate has pulled back here recently, but it's holding up better than the general market. Notice it's still above its 200-day moving average. S&P is well below it. So that is a slight positive as well. So there's a couple positives for you. Next. Moving to bonds, chart 56. Here's high yield corporate, which we just discussed. Again, it's pulled so far. This pullback looks okay. I mean, it's holding up better than the general market, which is a positive. Next. Chart 57. Here's TLT 20-year bonds. Last couple weeks it's been going sideways, but it's had one hell of a rally from this area. This was your area to buy it. Guys, when you have a downtrend line, a well-defined downtrend line, and you gap over that trend line on higher volume, that is a textbook breakaway gap. Those are gaps you chase. You buy them. Next. Chart 58, here's the 10-year treasury yield weekly chart. Getting down about 2.4%. But guys, symmetry, remember? This pullback here, this pullback is so far the same as this pullback. It's not broken symmetry. So this could be an area where we could see 10-year start to rally. If it follows symmetry, or if it goes down more, it could break symmetry. We want to keep an eye on this. Next. Chart 59, here's the yield curve. Again, as you know, this went negative many months ago and is extremely negative. It definitely, a recession is coming despite what, the CNBC people or Janet Yellen tell you that we might get a recession, we might not. We're getting a damn recession, guys. Let's not beat around the bush. Next. Let's go ahead and move to commodities. Chart 60, DBC, weekly view. Again, this isn't a long-term bull market as well, guys. But it got extended here and it is consolidating. Okay, if I show you a monthly chart, it's still long-term uptrending. But for now, it's been in a nice consolidation. This will eventually be a good buying opportunity again. Next. Chart 61, there's DBC daily. Again, it's downtrending here short term. Next. Chart 62, crude oil, been downtrending since the middle of the year. Nice steep channel here. Now this moving average here, that's the 200-week moving average. Remember, that's widely followed. If it does get into here, that could be a major support area. Next, chart 63, there's the daily view. Again, right now we have a steep downtrend channel. Price rallied last week right to the downtrend channel line. Fine resistance there. Next, chart 64, natural gas, weekly chart. Again, long term it's uptrending. Bounced off this support recently. Next, chart 65, there's the daily view. Right now you have sort of a flag pennant-like pattern here, short term. Next, chart 66, copper. Recently been stalling at the 200-day moving average here. So we'll see what it does. It's been chopping around. It's still above these longer term, these other supports. Next, chart 67, DBA, agriculture ETF. It's forming a big coil here. It had a bear flag, bear wedge back here, back in August. It's got a coil right now. Next, chart 68, uranium. I haven't talked about this for a while. This is uranium ETF. So this isn't a long-term uptrend, guys. It broke a long-term trend line way back here in late 2020, start of the bull market. Got way ahead of itself. Since then, it's been in a consolidation pattern, basically ABC, ABC, ABC stuff. This is my best guess here. Maybe we get another low as a C, and then I could see it bottoming and then having a big rally out of this, maybe sometime in 2023. Next, chart 69, sugar. As I commented early in the newsletter, this has a bullish chart. It broke out, a couple months ago, and it's got resistance up in here. There's various ETFs for it. Next, let's move on to cryptocurrencies. Chart 70, Bitcoin. Again, lost this long-term support back here in November. Basically sideways movement. Didn't quite make it to the trend line there. Pull back. Next, chart 71, Ethereum. Perfect break of the trend line here. Back test of it. Next, chart 72, US dollar. Again, the dollar topped out back here in September. Perfect back test of this trend line here. Broke the trend line, back tested it. Perfect example. Now, bullish look, though, is you're forming a potential falling wedge here with MACD divergence. Now, it's possible this wedge could still use a minor pullback to complete it, but it is a wedge. Next, chart 73, there's another chart of the dollar, the ETF, UUP. Again, you can see this potential 5-wave wedge. Next, moving to gold, chart 74, gold weekly view. Again, nice rally out of the wedge here and 200-week moving average. Okay, we lost it and we regained it. Stalling at some resistance here. Moving average ribbons pinching. Gold's been in a big range, double top over the last few years. Big support down in here. Next, chart 75, here's a daily view. Again, gold bottomed in this, kind of a triple bottom formation, broke this downtrend line of the channel, 50-day moving average, and been uptrending. You do have a potential wedge here, which we did break slightly. We have not broken symmetry, so this represents symmetry. Now, if we go below symmetry, then that'll be a little more bearish and we'll form a lower high, but for now, we haven't broken symmetry. Next, chart 76, silver. Silver, again, to me, silver looks decent. Had just a textbook rounded bottom here. Something you like to see in the club, right? No, bad joke, but anyway, we love those rounded bottoms. Anyway, looks fine to me longer term. Next, chart 77, GDX, been uptrending here, been choppy here as of late. Again, we call the bottom back here in September, which is, was a good call. Remember, the KISS trend system's still long. All right, guys, let's move to look at some individual stocks. So, chart 78, Apple or Crapple. Now, this is a problem for the market. So, first off, we called for a major high here in Apple back in August when everyone thought we were crazy. They said Apple was going to go to new highs. We called for a lower high, wave B. Steve did. Great job by Steve. So he deserves his drink over there in Cabo. But anyway, You can see we had this coil. We broke the coil to the downside last week. We're losing a little shelf support here. There's kind of another support here. But if it loses this area, guys, this will not be good in the short term. It's such a huge weighting on everything. Next. Chart 79, here's a zoomed out view of Apple. It's a logarithmic chart. 2009 lows. Guys, long term, I do believe Apple will at least test this long-term uptrend line. Again, longer term, not right now, but that's in the low 100s. Next, chart 80, Tesla. As you know, poor Elon and all his shenanigans. But anyway, Tesla has just been down, down, down. By the way, this thin zone I had in place early this year, we finally filled it essentially here. So we hit one of our major targets. This is another major support zone in here as well. Next, chart 81. Here's a clean Rinko chart. Getting right on a support here. If it doesn't hold, though, it could also go down to the 120 area. Next, chart 82. Here's AMD. It's a Rinko chart, so each box size is 3 points. Very clean chart. Look at this. Beautiful channel. Big support here and here. Again, guys, you can't get this in YouTube, but on our newsletters, we give you the live chart links to all of these that you can use. Next, chart 83, CBay was a long idea of mine last week. It broke out on Friday. Beautiful textbook cup and handle. It broke out on Thursday and then followed through on Friday. So despite the market selling off, this puppy did well. Next, chart 84, Yang. That's the triple inverse ETF for China. Someone pointed out it had a falling wedge early last week and it's bounced here. It's got the 9 EMA. It needs to clear here, but if it does, symmetry and everything measures up to around this 15 area. Next, chart 85, mRNA. It's like government motors, but government, vaccine, biotech, whatever, government biotech. Had a big breakout from this cup and handle pattern. It's pulling back. Someone asked me about it. It's still okay, guys. It pulled back to the 9 EMA. This is your support. You'd really want to see it hold in here, though. Okay. But this is an area to watch for it to find support if it's going to. Next. Chart 86, RVMD was a long idea of mine last week. Kind of a cup and handle look. You see it here. Starting to break this trend line. I bought this on Friday. Next. Chart 87, PBF, these CCI bungee plays. Remember, these are mechanical system-like trades. You had the 200-day moving average here. You had a perfect trigger off the doji. You had the CCI spike into below negative 250, your divergence. So your trigger is here. One hell of a trade it's been. Next, chart 88, DBI. Here's another one I'm watching for a potential trigger. I've been watching this for the last week. I got a new trigger over Friday's highs at $9.97, $10 if you want to round that up. If it triggers, your stop goes immediately at the lows. Next, chart 89, SWBI, another CCI bungee setup. Again, your setup on these is your big CCI divergence. It's got a spike, way down like here, well into the negative 300s and diverging. So my trigger now shifts to Friday's highs. If it doesn't trigger on Monday, then I get a new trigger. Next, chart 90, MTB. Here's a new one, and I really like this one. This one has a nice doji here, and you got your CCI divergence. So my long trigger would be 1 penny over Friday's highs, 140.88. Let's just round it 140.90. Your stop, if trigger, goes at the lows. Next, chart 91, BN, another reversion to mean CCI setup. Again, 1 penny above Friday's highs, stop at the lows if it triggers. Next, chart 92, CH. Cardinal Health has been on the watch list for the last week. It's been holding this support. I commented last week you could have bought it with a stop just below this trend line. I'm long a little bit of it with a stop. All right, guys, let's see what happens this week. ES futures are currently up 2 points. Again, we do have that big open gap on the S&P. Cash. So it would not surprise me if we sold off and filled that early this week, but then maybe we start some sort of Christmas bounce. But I do believe we'll form a lower high, ultimately because of the symmetry break, which I discussed on the 2-hour time frames. All right, guys, enjoy the rest of your Sunday evening. Happy holidays, everyone. Merry Christmas, almost about a week from now. My kids are excited. Again, take care, everyone.